Is now the right time to be afraid, or is there still headroom in the risk assets? Joining me today, Peter Hugg, Global Trading Director over at Kitco Metals. Pete, always good to see you. Welcome back.
Yeah, it's nice to be here, Danny.
So last time we spoke, which was last week, trade war fears weighed down on markets. Equities still haven't fully recovered. Do you see any good news on the horizon? And for our viewers out there, we are speaking ahead of the Fed here.
Again, this has been a tough market, as a lot of traders are aware. We've just been trading the ranges. As you know, the last time we spoke, we bought at the 200-day moving average at 1268. We had a stop in. We got stopped out at 1292. We re-entered the trade, although this time I'm a little bit less convicted, but we re-entered the trade on Monday at 1269, which is now the 200-day moving average. I did that transaction more on the premise that I believe the Fed, when they announced today at 2 o'clock in their minute meetings, they're going to express some concerns about the risks on the global economy, including obviously the trade wars. But they may also bring up Brexit. The British pound has dropped some 5 cents over the past 2 weeks. So there's a number of issues out there that would not allow me to go short into the market and be able to sleep at night. So what we're trying to do is pick off the support lines and look for bounces. By the time this airs, if it airs after the Fed meeting, we may be out of the trade. That 1269 long position we have, I've got a very tight stop at 1267. If the Fed doesn't deliver today on some kind of sort of dovish sentiment and this market starts to get hit on the bid, if we lose 1269, I think 1240 is a reasonable assumption. Yep. So we want to be protected on the downside. Yep. If we guess right and the Fed expresses concerns and sort of gives indications that their next move is going to be a drop in interest rates, I think we may see a pop into the 1280s, at which point I'll have to consider whether or not to take the profit or ride the trade. So it's a really difficult market to trade right now. There's a lot of different influences on the market. It's very, very volatile and very thin, and there's very little participation in this market. So it's difficult to get a bead on momentum and direction right now.
And I think difficult is a good word, Peter. That's what I've been hearing from other sources, and many are worried it might be a tough summer. Is it too early to tell whether,
Well, summers are weird. Generally, I've been in the business since '73. Generally, July and August is usually when we forced all of our traders to take their holidays, because that's usually when there's a hiatus in the market and there's very, very little action. And generally, that's the rule. But there are times, especially if these markets start to soften and we get silver, for example, south of $14, I think there's going to be extreme interest in the market from the retail public south of $14. Yeah. And if that happens coming into sort of June, July, when the refineries and the mints, i.e. the U.S. Mint and the Royal Canadian Mint, tend not to have peak production, that tends to spike premiums. So there could be some fireworks coming this summer if the producers are not ready for demand. Should this market sink to levels that we have not seen before, i.e., south of 14 on silver and gold back in the low 1200s.
Okay, so maybe right now, maybe we're just seeing a case of sell in May and go away. And it's just a seasonality play right now?
Yeah, I just think North American investors are just really not interested in this market. There's just it seems to be just a lack of disinterest in this market in North America. But that's not true in the European context, nor is it true in some of the other markets where, because of the currency depreciation against the dollar, metals have actually been rising. So we are seeing physical offtake in the European markets and to some extent in the Hong Kong market, and also in Canada with the Canadian dollar, pretty relatively weak against the U.S. dollar. Prices for gold and silver in Canadian dollar terms have actually not moved, and in some cases have gone up, depending on sort of what your metrics are. It's in U.S. dollar terms that gold and silver have sort of been lethargic, and U.S. retail investors have been sort of shying away from the market and selling their physical for whatever reason. Either they're using that money to get into the equity market, or they're using the money to pay bills. I'm not sure what the case is, but there tends to be very little interest in the physical market from a U.S. investor's perspective.
All right, Peter Hug, thank you so much for joining us today. We will see you back next week.
Okay, nice to be here.
Thanks for joining us, and thanks for watching. We'll be back tomorrow.